Good morning, ladies and gentlemen. My name is Greg Michalowski from Forexlive.com. Today's date is January 13th, Friday the 13th, mind you. So be aware, don't walk under any ladders or break any glass or do anything like that. It might be detrimental to your health. So I'm going to take a look at the technicals that are driving the Forex markets. We'll start by taking a look at the euro versus US dollar. If I take a look at the daily chart in this currency pair, what we saw yesterday was a move to the upside. That a move to the upside took the price above this swing area. This swing area goes all the way back to the month of March and April, and then in May and in June, the market had its last test of this area right through here and rotated to the downside. And we moved back up toward that level in December and found sellers. And then in January, we've seen the price move above it. And yesterday's CPI data, which came in a little bit weaker than expected for the headline number at minus 0.1%. We saw the dollar move lower and the euro move higher, and we saw that break of this top side of the area at 1.0805. But as you can see in trading here today, the low price today has come in at 1.0803, just in a little bit below the top side of that swing area, and we're currently trading at 1.0811. So we're trying to test that level on the downside and trading here today. If we move back within this yellow area right here, we could see further selling that could take the price down toward the 61.8% retracement or the low of this swing area near 107.468. Alternatively, we could see the market buyers come in here. It's the opportunity now for the buyers to come in and prove that the break was for real and move the price to the upside. So key level here intraday. And from a daily chart perspective, to see if the support buyers can come in near the 1.0805 level and keep the price elevated for the euro versus US dollar. But it is a down day overall for that currency pair so far. Let's take a look at the dollar versus yen. If we look at this pair on the daily chart, we're continuing its move to the downside here. The dollar's moved to the downside, so opposite from what we're seeing in the euro versus US dollars. Dollar's getting stronger. In this case, the dollar is getting weaker against the yen. We have the Bank of Japan meeting next week. It's going to take place on Wednesday in Japan. And there's some rumblings that they'll continue their move to the upside as far as rates go, a little bit tightening to kind of yield or bring back inflation a little bit. So the dollar yen continues its move to the downside. Tested the 61.8% retracement of the 2022 trading range here on the daily chart, which is a nice target for that pair. The 61.8% retracement comes in at 128.16, and the low price in trading today reached right around that level. The actual low price today came in at 128.10, so we're just a little bit below that level, currently trading at 128.27, so we've seen a bounce back above the 61.8% retracement. But keep that level in mind in trading here today. If the market's going to move lower, we need to get and stay below that level. On the top side, the high price today has reached 129.42, and that is a little bit short of the earlier low for the month of January. That low came in at 129.498, so we're within 7 pips of that low right here at the highs, and we found the sellers against that level. So if we were to define the range today from a technical perspective, it would be against the old December low. We broke through that level yesterday, closed below that level, and held the level here today. And on the downside, the 61.8% retracement at 128.16 would be the next level to get to and through. So the daily chart is kind of showing the way here for the dollar versus yen, just like in the euro versus US dollar. Let's take a look at the sterling versus US dollar. Might as well stick to the daily chart here to start things off. And we are seeing a move back to the downside in here in trading today after yesterday's modest rise. Yesterday took the price to new January highs here, but fell short of this swing area here. This is of the move down from the June 2021 high to the low that we saw in September. The 50% retracement would have been a next key target on the top side. It fell short of that. Started to rotate to the downside. Let's take a look at the hourly chart in this currency pair, and we have a number of different swing levels. This goes back in time here. Just follow this yellow area through here, and you can see that over time there's a number of different swing areas, especially over here where the market had highs highs through here, and that stalled the rally. A number of different highs in this area right through here over 3 or 4 days before the market started to rotate to the downside. So if we fast forward to where we came in this week, the market came up toward that level first toward the beginning of the week and found sellers against that level. And then in trading yesterday, the market came up into that area, went a little bit above it here, and rotated back to the downside. And trading here today, as you can see, the market did the same thing that we did here yesterday. Couldn't sustain the momentum and started to rotate back to the downside. What is important here, not only from that this ceiling area perspective up here, 122.41-ish type area, is that the price has moved back down to test the 100-hour moving average. That's the blue line in this chart. And as long as the price can hold above that level, then maybe the buyers still have a shot here. But if we break below that level, that would open the door for further selling pressure on the disappointment, with the 50% level as the next target. That's of this move down from the mid-December high down to the low that we saw in early January. The 50% comes in at 121.43. So 121.67 is a key level here for the sterling versus US dollar to start the US trading day. Move below it, more bearish, stay above it. And this area up here between 122.09, 122.417 will be eyed again as resistance for the sterling versus US dollar. Finally, I'm going to take a look at the dollar versus Canada, this on the hourly chart. If we look at that chart right through here, what is significant for it is that the price is moving through the 100-hour moving average. That 100-hour moving average currently comes in at 1.34028. I'm going to put it on the four-hour chart here to show this swing area through here. This swing area is also in play, and the 61.8% retracement of this move to the upside. So we have a number of different swing highs and lows, starting way back here, where the market used this level as sort of a bullish above, bearish below, through here, and in trading in the month of this week, we've seen the price move below it and then move above it. As you can see, we're starting to move back above it. It also represents the 61.8% retracement of this move from this low to this high. So getting back above the 134.028 level is significant from the 4-hour perspective, and also from the hourly perspective, in that it represents the 100-hour moving average right through here. So key level right here, 134.02. As long as the price remains above that level, the short-term bias remains to the upside for the dollar versus Canada after the run to the downside ran out of steam. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.